everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you. I'm joined by Relph of Comstock Investments, and we're going to talk about how we wrapped up the week in our ag commodity trade and how the market reacted after we got the USDA WASDE numbers on Friday morning. Interesting stuff. Now remember to like this video and subscribe to this video so you get notified when we have updates, and then share it with others too, because we're going to be covering some fairly critical information here. All right, so Eric, as I looked at the WASDE report when it came out, I thought, well, that was a typical yawner. You know, we didn't see much of in the way of changes there. The market didn't really seem to change. It may have blinked a little bit for a few seconds, and that was about it. Then I came back and rechecked the markets before the close, and it was a totally different scenario on the topic for today. I said we had liftoff after that on soybeans and wheat. What changed anyway?
Yeah, so the biggest thing was traders were looking for what was the Brazil soybean production number going to be. So when we looked at the global production as categorically, but South America in particular, you look at the Brazil number's been the one that's been talked about and disputed and debated for weeks now. And, we've been at a 145, and last conversation I had with Matthew Cruz was he's thinking we may be even lower than that, but not willing to step out on the limb just yet and announce that officially. But, the vast majority are between 145 and 150. The USDA last print was a 156 prior to today. They had trimmed in the February report, they had trimmed the number from 157 to 156, but then increased the prior year's crop production by 1 million tons. So it was literally a wash on total South American production over a 2-year period. So that was disappointing. And I think the trade was looking for USDA to play a little catch up today. That wouldn't have been a surprise. The average estimate was for a 151.6. So they were looking for a 4.4 million ton reduction to that Brazilian bean production. That would get them closer to in line with boots on the ground estimates that we have and others have been releasing, including the Brazil Ag Ministry and CONAB are much lower than USDA. So they're not only conflicting with these private estimates, but also with Brazilian's own government estimates. The number comes out, they trim it 1 metric ton to a 155. And immediately you saw a little weakness in the beans, but it was fairly muted. And so then we just kind of treaded water for several minutes following the report, and then you start to carry higher, and the market just continued to push all the way to the finish. We were making highs in the last 15 minutes of trade today. So what that told me as I looked at it in real time and in retrospect is the market just shrugged off what the USDA said. They're basically saying, you're wrong. We're going to believe the boots on the ground, and we're going to wait and see what pans out over the next couple of months.
I keep thinking back, and we've talked about this numerous times in the past. The old saying is the market will bottom on bearish news. Maybe this was what we've been waiting on.
Absolutely. And that's something I commented on a couple of times in my report comments this week was, the funds now, it feels, and I could be wrong, but it feels like now the funds are having to defend this short position. And the amount of money that they've made since establishing this net short is astronomical. And they're not going to defend that for a long time if the recipe isn't there. If they don't have the right ingredients and it doesn't look like it's going to pan out the way they think, they'll start bailing. And when they start that massive liquidation, that's when we're going to get a real rally. But that's going to have to coincide with something fundamental, whether it's troubles in Brazil, we start to get, some quality issue reports on the soybean production, or a combination of that with Safrinha growing trouble on the corn crop. Or it could be also U.S. planting troubles, whether that's too wet. That doesn't look likely at this point, but there could be anything, and you typically do have some kind of a rally as you move from spring into summer. That could be massive if the funds decide to liquidate within that time frame.
Well, Brazil gets all the attention, but did anything really change in the way that we look at Argentina production this year or not?
Not really. I mean, Argentina's production this year far outweighed anything they've done for the last 3 years, but they've been in a multi-year, massively horrible drought. And so we expected Argentina to have a much better year this year. That is going to counteract some of the losses in Brazil, a fair amount, but Brazil is still the main game, So no real surprises in Argentina. And in fact, in the global balance sheet, when you looked at the ending stocks there, really it was a moot point. I mean, there was very little change from what the estimates were. It was just almost right in line with expectations. So Argentina isn't swooping in to save the day, but they are going to have a much better year than what we've seen from them for a long time now.
Let's take a look at the U.S. grain ending stocks. And did you see anything in there that really caught your attention today?
I was a little surprised with the amount of chatter that we've had regarding, of course, lack of exports in the soybeans is a big topic. Everybody wants to see better soybean exports. They want to see China come in as a buyer. And then there's been a lot of rumblings within what we'll call the trade, some analysts and different things saying that they think that the USDA has overstated the domestic crush demand, which I have had a really hard time wrapping my head around with the expansion of plants and stuff. Then you start to hear about there was a couple of biodiesel plants recently that shut down. And so you think, okay, did they see something coming that none of the rest of us were aware of? But you can shut down biodiesel and prop up the sustainable aviation fuel and the renewable diesel. They're two different things. And so the demand actually seems like it would be heavier domestically for soybean crush. But that chatter's been out there. The lack of exports has been prevalent, and we still lowered the bean ending stocks from what the trade estimated for this report. Now, I'm not saying the USDA lowered their number, because they didn't change it at all. It was just lower than what the trade expected today. And so that was the only thing that kind of surprised me. Wheat a little bigger, not a surprise. Corn nearly in line, but maybe a touch bigger, not a big surprise there either. So the beans being lower than the trade estimate was a little.
But there again, you talked about the wheat being higher than expected, and it really surprised me the way wheat acted the way it did after the report came out.
Yeah.
But I guess when you've been trounced like you have for about a year straight like that, especially lately,
Yeah.
maybe that was just a point where some of the folks took profits and ran.
And that's exactly it, Marlin. I mean, you had multi-year lows posted earlier this week, and you uncovered some buy-in at those levels. And I'm a bit surprised that there were that many buyers waiting in the wings, but you saw some real reaction after you posted those lows, and that's a good thing for the marketplace and in general for U.S. grain farmers. When you look at the corn price versus the wheat price, wheat's undervalued, but there's still got to be demand for it, specifically for wheat. And the bigger surprise to me with the wheat today was not necessarily in reaction to this report, but we made such a spectacle, for lack of a better term, about Chinese purchases of U.S. origin SRW wheat earlier this year. They made several larger purchases, and that really excited the market. And we started a rally that we thought might be sustained. And then I think the reality of, well, they could cancel those too if they can source the wheat from other places, and they would probably prefer to do that. Well, they're doing that. And then we come in and we get 2 consecutive days of flash cancellations of SRW wheat from China, both yesterday and today, over 100,000 tons. And so with that, in conjunction with this report, to have a higher market for a couple of days here was pretty impressive.
Well, especially when you've been talking about the fact that Russia and several European countries are really, really undercutting us on price.
Yes.
That's hard to compete with. What do you do?
Yeah. I mean, Russia has, in the last, we'll call it 40 days now, because we're pushing towards the 10th of March here, but since the 1st of February, Russia's FOB wheat has dropped from 225 a ton to 198 a ton. That's a huge chunk. And they're, I don't know if it's just they're trying to come up with anything they can that's not sanctioned in order to feed the war machine, to fund it, or what exactly is the driving force. But that has really pulled down Paris milling wheat. And those two really dictate the global market, because they have all the buyers in their backyard, with the exception of Southeast Asia. So now that's where Argentina will come in. If they can make a nice crop, they'll do some exporting there. And we usually do a fair amount, especially when we get into spring wheat season. But, it'll remain to be seen.
Now, as we look at our world grain ending stocks numbers that came out today, I couldn't find anything that seemed to cause any ripples. I mean, the trade
No,
was just right on the money on the gases.
they did a really good job of pinning that down. I would say maybe one of the biggest surprises we saw was the USDA looked for a 5 million metric ton increase in Chinese bean imports. So they're looking for Chinese soybean demand to increase. And I'm still very curious to see how this is going to play out once we start getting these Brazilian beans over to China and they not just China, but other buyers as well, to see just what the quality is going to be like. Are they going to be getting what they need from these beans that had to endure such a dry growing season? We've seen that here where it takes twice as many beans to make the same amount of oil because it's too dry. And so I'm really waiting and watching to see what comes of this as we get down the road here and they have the opportunity to assess the quality.
Back on the wheat for just a second here, I wondered if the trade was finally starting to come to grips with the fact that I'm hearing more and more stories. I mean, we've all heard about the wildfires in Texas, but it's starting to get a little uncomfortably dry again in the southern plains, from what I understand.
Yeah, and that's location specific, right? You've had two major storm systems move through here in the last 48 hours across portions of Oklahoma, Kansas, Missouri, but some of the areas that are the driest have remained out of those systems and haven't caught any of that rain. And so, yeah, it's going to continue to be a story as time develops here. The fire itself isn't going to hurt wheat. Wheat won't burn, not in this phase of growth. But smoke can cause problems. Overcast can cause problems. We heard all about that with the Canadian wildfires overshadowing U.S. growing regions in the Corn Belt last year. There were many days that here in Iowa we were smoky from the Canadians wildfires, and so it can have effects that you can't really assess in real time, and you don't know what that's going to do to the overall development. But the drought situation is intense, and unfortunately, here in Iowa, we're right in the heart of the worst part of the drought monitor right now. Hopefully we see some kind of a shift. There's been a lot of chatter in this region about 90 days after fog. January was just extremely foggy, which, doesn't take a mathematician to figure out April could be really wet. Hopefully we see that.
If it works.
Yeah, right.
Okay, so we've been talking at length here for several weeks about we were anxious for February to get over with, for March to, turn the calendar over into March. And we've had such a long-term downtrend in the grains here that there's been a lot of talk that corn and soybean farmers, that were holding grain, they had kind of relegated themselves to, well, if we can get maybe a 20-cent rally in the market, we might take advantage of that just to start paying off some loans and some bills and that sort of thing. Does that concern you now that if we do start to get a little bit of a rally, all of a sudden there'll be a big rush of farmer sales that'll cap the market for a little while?
It is concerning, yes. I wonder at what point are we going to see those sales being made? And this is, you're talking to somebody who talks to farmers all day long. And there's a lot of emotion that goes into their marketing decisions, unfortunately. And so we have to figure out what are real resistance levels and what's the real potential here. And the answer right now is we just don't know, because we don't know what the real trigger is going to be. We talked about the safrinha corn growing season. We talked about the quality of the Brazilian soybeans. We've talked about potential adversity for U.S. planting. You could also talk about Elwyn Taylor's 89-year cycle. This is the bullseye year for an 89-year drought cycle. If that comes to fruition and we have a wet planting season followed by an extremely dry growing season, all bets are off, and who knows where we're going to go. And good, bad, or ugly, farmers know all this, and they're talking about all of this. And so, yes, there's going to be selling. Cash flow needs have to be met. Bins have to get cleaned out. We have to make room for the next crop. All those things are true. But I don't know at what level and what will be the trigger. Technically, there are gaps all over these charts. December 24 has a gap. December 24 corn has a gap at, and I'm working from memory here, so bear with me. I believe the December 24 gap is at 503. The December 25 gap is at 504, and November 24 beans is somewhere around 1244. So there's some room for these to run before we hit those resistance levels. But I would bet anything that if we can see $5 cash sales, there's going to be a lot of farmer selling. So basis will dictate some of that.
Are you writing a lot of options right now?
Yes. Yeah. We've been doing a lot of new crop out of the money calls, selling the time value basically. If it's wrong, great. We can still get some pretty nice premiums for some 520 to 540 call options in that December. And so, if that's wrong, then that means we have a board that's above 520 or 540. You know what I mean? So if that's our worst sale, great.
Well, let's look at the livestock trade as we wrapped up the week here. Cattle market kind of took it on the chin.
Mhm.
Of course, that would kind of coincide, I guess, with the rally in the grain markets. How closely are they tied together right now?
I would say moderately. 2 weeks ago, not at all. Last week, you started to see some signs. This week, yeah, they're kind of starting to reflect each other a little bit. I would say the most critical thing that I saw for quite a while was today. In the April live cattle, you traded to, and again, I'm working from memory, 189.95, I believe. And 190 is stiff resistance in that April. You could see trade to above 190, but then you run into another gap situation where that is going to serve as technical resistance. You've got a lot of technicians looking for that level. And I think today they just cheated that number a little bit and started selling a little early. Unfortunately, not enough producers were of the mindset that this was going to be a lid short term and didn't get enough hedging done. We've got quite a few with LRP on, not a lot short the board, several with put options underneath the cattle, but not what I would like to see at these price levels. I mean, you've got a 195 April 25 board. These are prices we've never seen ever. And I feel like you should be taking advantage of them. If it's wrong, great. The cattle are worth a lot more, but this is something to really be considering.
Well, you work with LRP quite a bit, and did I hear correctly? You were saying the other day in a meeting that if there was ever a year cut out for LRP, this might be it.
Yeah, we started last year, hit it pretty well late year. You had some really nice highs in that time frame, and then you just tanked after that, and the market fell to levels that nobody thought it could. And here we are again, bumping up against those levels. We could see the same thing all over again. Now, granted, the April 24 contract made its contract high at 199.92, I believe. So just shy of $2. And here we are just shy of 190. We're getting in some pretty thin air. So it's definitely something we've got to think about. Fundamentally, the cattle market is strong. It's going to be well supported, but you've got to secure your operation while you can.
Well, I know LRP, it's relatively somewhat new program, and I believe some changes have been made lately to it. But I'm sure a lot of people have some questions about how that might be able to help them protect their bottom line a little bit. I imagine you're open to fielding a few questions about that.
Oh, yeah. Anytime, anyone, doesn't matter. Yep.
All right.
Yeah.
Am I correct in looking at the feeder cattle market? Did they actually have an outside down day on Friday or not?
They did. Yeah, we went up and well, several contracts did. I'm not going to say all of them, but because I just frankly didn't look through every contract, but several of them did push up, make new highs, and then finish notably lower for the day. Not a pretty finish to the feeder cattle. No. I will say though that the cash market is excellent. Feeder cattle cash, fed cattle cash. We saw $3 higher live trade, $2 higher dress trade. Feeder cattle have been nothing but steady to higher. So really not a lot to be concerned with in the actual cattle market, but the futures struggling with resistance.
Nearby lean hogs look like they broke out of the bottom side of an uptrending channel here a while back, and now they're kind of going sideways a little bit. Does that look kind of ominous right now or not?
When you look at the deferred contracts, which are a little more important right now, April matters, but we knew the cash wasn't going to come around to a level that was going to be anywhere near indicative of reality once we get down, 3 or 4 months down into the year. But the April was still holding just too much premium, and the cash isn't accelerating at the pace that the futures would have indicated, at least in that April contract. And so you're seeing a little breakback to meet up with cash here as we come towards April. Unlike cattle, hogs don't trade to the end of the month. So you only have a few weeks left where the April contract is very relevant. May doesn't matter at all. I don't even know why we have it on the board. So then you go to June, and you've got really nice premiums in the June. But this week, you push to new highs for the move. You make a new weekly high and then struggle a few dollars. And that's to be expected. You get up into lofty levels that are profitable for guys, they're going to hedge. And that's what we saw this week. However, I would say to finish the week, again, we saw some really nice Wednesday, Thursday, we saw some really nice cash market action, and the futures sustained. Cutout hasn't broke, although it's been a little soft the last few days. Today we had a nice little update in the early reporting. We'll see if we can hold that to the close, but the hog market in general looks pretty good. I just don't know that there's a lot of gas left in the tank.
Well, there's going to be a lot coming up later on this month. Today was a very busy day to wrap up the week, but of course, all eyes turned toward, I believe it's March 28th when we get the quarterly stocks report, and then we'll get the planning intentions report. That ought to be interesting to get an idea on what we may be looking at acreage by then. Of course, everything is subject to change, but can't wait to cover that one too.
Yeah.
I want to make sure we put out your contact info here, Eric, in case somebody does have questions about the LRP or any of these grain markets, the way they're acting right now. I believe your email is ericr@comstock.com. Is that correct?
Yep, ericr@comstock.com, or you can give me a call at the office, 712-227-1110. Be glad to talk to anybody about it.
That's awesome. All right. Well, Eric is a terrific resource if you want to talk with him about risk management in the grain and livestock markets. He's got all kinds of information for you. All right. That'll do it for this particular episode. Thank you so much for joining us. For producer Breanne Hendrickson, I'm Marlin Bohling. Catch you next time on the Comstock channel. Thanks for joining us on our Comstock YouTube channel. Don't forget, you can also find us on Facebook and TikTok as well.